what's the difference between exchange traded fund and a mutual fund? Is there
Ah,
any like pros and cons to each
yeah.
of them?
So exchange traded funds, also known as an ETF and a mutual fund. So mutual funds were first. They're the oldest. They go back to 1920s, I believe. Late 20s is when they first started. And the concept behind a mutual fund is that they're going out and creating a basket of securities. Stocks or bonds are the two biggest ones. And what they're doing inside there, for the most part, is holding on to that basket. Sometimes you have a manager, and so that manager is buying and selling, say, stocks for you. Those are usually more expensive. You can buy index mutual funds, which don't have a manager. You can buy the S&P 500 inside of a mutual fund, and just, those are a lot less expensive. Um, and so then an ETF came along more recently, has the same aspects of the mutual fund. It's a basket, a grouping of different stocks or bonds. There are some actively managed ETFs, but most of them are passive indexes, as far as that goes. So pros and cons. On average, ETFs are cheaper on the internal expenses than the mutual fund. So that's one of the things that really drove me towards exchange traded funds over mutual funds, is that they were just cheaper. And then secondly, right now, when you look, I mean, we clear our business through TD Ameritrade. If we want to buy or sell a mutual fund, it's fairly expensive. It's like $24 to buy or sell a mutual fund, but I can buy and sell a exchange traded fund for free. So that's actually another really big difference, right? I like no transaction costs on the exchange traded fund. One of the other big differences on exchange traded fund versus a mutual fund is exchange traded fund can be traded at any minute of the day. Mutual fund only trades at the end of the day. And so, if the market's falling apart that day and I want to get out, I can't. I have to wait until the end of the day every time to sell on a mutual fund. Whereas an exchange traded fund, I can, kind of get out if they're, or buy it for that matter, in the middle of the day instead of having to wait till the end of the day. A couple of other key things that I think are quite important is like one of the things that happened, we had a tremendous run up, right, in the accounts, from basically from the election all the way through the middle of February. And we had just things that were going up farther than I've ever seen in a short period of time. And it made me very nervous. And I wanted to put stop losses in place to be able to protect some of those gains so we didn't get wiped out when it came back down. And it did come back down. And so you can't, a stop loss is where you just kind of draw a line, in the sand, so to speak, and you want to sell when it gets to that point. And I'm simplifying this, but you can't do that in a mutual fund, but you can do that in a exchange traded fund. So I do like that. I like that capability of being able to get out during the middle of the day and to put in a stop loss. At some point in time, there's all kinds of things I could put in: buy orders above or below the market. I can put in sell orders above or below the market, all things that you can do with an individual stock. So an exchange traded fund is like a combination of an individual stock and a mutual fund. I think it's the fastest growing area in the investment arena right now, is just that area of the exchange traded fund, and we use it a lot. I love exchange traded funds. It's one of my favorite pieces. So I think they have a lot of advantages. They're cheaper, both the transaction costs and internal costs. On average, you can get in and out. You can set stop loss. You can write options against them. So you can do covered calls, put options, all kinds of things that you can't do with a mutual fund. So just a lot more flexibility. I think everybody's kind of waking up to that at this point in time.
So you think using mutual funds is kind of like a thing of the past, and now ETFs is the way to go if you have like a kind of like a comparable one?
Yeah, I think that's right. I think that's exactly what's happening. The outflows out of mutual funds has been quite high, and the inflows into exchange traded funds has been quite high. So I think what we're seeing is a rotation to a better vehicle. We'll have to see. We did get a chance here to see, in the 2008 downturn, how did exchange traded funds hold up versus a mutual fund? Is there price distortion that happened? There was some, but nothing that would scare me out of those. Sorry. We also had a downturn just last year. saw some price distortion in ETFs, but they did quite well actually. So because that's one of the pieces that people look at. They're exchanged by the day instead of just at the end of the day. So yeah, I definitely think the rotation to exchange traded fund is happening. I don't know that mutual funds would be a thing of the past, only because there's just amazing amount of money in them in total. And no matter what the situation, money tends to stick around, at least some of it, right? So there'll be there'll be plenty of money in some of these mutual funds, going forward. But